And we're live. This is the Coverage Your Podcast. My name is Nick Lamparelli. I am in podcasting headquarters in Naples, Florida. And today we're going to be talking about small business and small business insurance and Insurtech and FinTech and a whole bunch of stuff. My guest is Travis Hedge. Travis, welcome.
Thanks, Nick. Happy to be here.
Happy to have you. It's going to be awesome. Travis, I start every episode by allowing the guest a little elevator pitch. So who is Travis Hedge? What do you do? Tell us why. Tell us why it's important.
Yeah, so thanks again for having me. I'm one of the co-founders of Vouch Insurance, and Vouch is an insurer for the technology industry. So we focus solely on venture-backed technology companies. Today we serve seed and Series A stage companies with the business insurance that they need to grow. So whether it be the D&O that's required by their investor joining the board, the general liability required by their landlord, although that's a rapidly changing topic we'll talk more about today, or the E&O and cyber required by their customers. Because we're the underwriter and we control really the full value chain, that enables us to do, provide that insurance in less than 10 minutes, active same day. And it's all really uniquely tailored to the unique needs of venture-backed technology companies.
Yep. Well, fantastic. Those that have followed my podcasting career know that Travis, this is old hat for him, so he's been on before. We will travail some paths that we did before, but I think we're going to get into some new territory as well and really get into some of the technical details when it comes to their specific business model and how they have thought about it from launch to where they're going now and maybe where they see themselves in the future. So I would be remiss, Travis, if you did bring up small business and how things have changed for them. Now you have a vantage point. You see a lot of small businesses, especially like you said, the ones that are sort of venture backed, which means these are companies that kind of thrive and functioning in an area where losses are kind of expected. They're experimenting and working on a lot of stuff. So you wouldn't necessarily describe a lot of these companies as having a cushion of cash to kind of make it through things. The pandemic must have hurt, but can you, from what you've seen with your insureds and your policyholders and the small businesses that you get to interact with on a day-to-day basis, how did they weather it?
So I'll start with, there's actually, I think, a really important difference between venture-backed startups and your typical small business. And I actually think one of the reasons Vouch exists is that in insurance today, they get lumped together in a lot of ways. And so, the general liability product that a venture-backed technology company is buying is the same one that a small business on Main Street is going to buy today. And the challenge with that is, they have fundamentally different risk exposures. Your typical startup might be, working in WeWorks or a distributed team that does most of their interactions on Slack and Zoom versus having maybe a physical storefront, right? And so I think those are some of the really important differences between the category that we're really narrowly focused on and small businesses more broadly. Now, we've had it really interesting, I would say, like perspective into both because a lot of our customers also serve small businesses that have been directly impacted by things. And so when I go back to March, when crisis first hit, we're going to lockdown. Step one was really looking inward and making sure that we're taking care of our team and that folks are okay. At the same time, what is the impact that this is going to have on our business? And so we looked at, we went through our entire customer base and tried to analyze, okay, well, who might be impacted by this? How should we respond? We did issue a 20% COVID premium refund proactively in Q2. That ended up, I think, becoming a requirement in certain states eventually. But what we saw was, frankly, I'm glad we're not in the crystal ball business because I think the companies that we expected to maybe struggle through this, that perhaps served the restaurant industry or, they served small businesses. What's been really cool to see is how quickly those companies have actually responded and in a lot of ways are thriving. Like companies that have come back to us and said, hey, we need new COIs because we've signed all these new deals with this new product we rolled out in the last 6 weeks. That's really cool to see because I've also seen the other side of it. Nick, last time you and I talked about the fact that my dad runs a small independent insurance agency in Columbus, Ohio, and they work with a lot of small businesses. And frankly, some of the most stressful conversations I had back in March and April were talking to them about the struggles that they were facing, that their clients were facing every day. And, that that had a major impact. And now I think, a lot of our customers are fortunate in that they're venture backed. They do have maybe a little bit of extra cushion, versus maybe a more bootstrapped company. But the runway doesn't last forever. And so I think a lot of companies have had to get really creative in terms of how do we extend that runway, perhaps pivot our business. Others have had huge tailwinds, quite frankly. And so some of the things that we're seeing, for instance, I think a really great example of this is, we have one client, a company called Neighbor out of Utah. So they're backed by Andreessen Horowitz. They're a platform. Think of them as almost like an Airbnb for storage, right? So they let you open up your garage and turn it into a storage unit for your neighborhood. Well, a couple months ago, they launched a new service for to let offices in San Francisco turn themselves into storage units, because at the same time, every week we have customers reaching out to us saying, hey, we're closing our office, moving all of our furniture into a storage unit. Can you help us make sure that our coverage reflects that? And so it's been really interesting to see kind of both sides of that coin, how companies are responding internally, and how a lot of our clients are, nimble enough to be able to provide solutions for this unique moment in time.
Yeah, I guess given the cross section of startups and companies that you're dealing with, they probably lean very heavily on the tech side of things. And so it does sort of make sense in some ways where there would be this, because we see it in like traditional insurance where all of a sudden legacy insurers who have struggled with tech and with digitization now sort of have permission to kind of put the throttle down and like get digital fast. And so companies that sort of provide those sort of solutions will be highly in demand, very likely. So I'm wondering if you saw some of that.
Oh, absolutely. We have a lot of our customers that are in the sort of remote collaboration space, and a number of new companies that keep coming in that are getting started to solve those problems, right? Anytime you have economic crisis like this, it's a huge spike in new businesses being created, right? And if you look back to the last recession, you had Uber, Airbnb, Twilio, you name it, all kind of created in response to the crisis. And when you look back at the number of billion-dollar plus companies created, there's a huge spike around recessions. And so, sorry, that's a long way of saying I think there's a lot of really interesting stuff, happening there right now. And in particular, a lot of the collaboration tools are, a really important part of the story. However, I will say that, I have a lot of friends at, legacy carriers that I still, talk to quite frequently. And I'm not sure that every company has fully leaned into that yet. I know at least one example of a Fortune 100 insurer that forced everyone to come back into the office recently because they found it just wasn't working. And so, I think maybe that's the piece where I would really, I think we see it as well. We know we want to get back in the office and collaborate with our people. In a lot of ways, we think about technology as a tool for how do you make humans more effective. And, that might look different in a company like Vouch than it does in a Fortune 100 insurer.
Yeah. Yeah. No, that's really interesting. And part of your business model as well has to be being nimble, right? Because the companies that you're dealing with are, pivots are just sort of accepted. It's a common thing. And so the types of small businesses that you're dealing with are small businesses growing rapidly, but also changing on the fly. So I love the concept of when you brought up, was it neighbor or neighborhood?
Neighbor, yeah.
Neighbor. And I'm thinking, how do you handle that exposure? Like, how do you have that conversation? Like, the exposure's changed, and how do you deal with that? And so you must see that a lot. Talk a little bit about that part of your business model and how you as a company need to stay flexible. You can't have ISO forms that last 10 years without necessarily being changed. Like, you have stuff where policy languages need to be changed, what the exposure is, where it is, like the covenants and all of that other stuff. Talk about that challenge.
Yeah, well, and part of this comes back to the conversation you and I have had, Nick, around like what pieces do you want to own and really innovate around versus what do you need to rely on kind of the industry, what exists today. And, out of the gate of that, we knew that this rapid change, whether it be growth or kind of pivoting to a new direction, that it would be really important that we were, frankly, the most flexible, the most responsive insurer in the market, because that's what our customers demand. And I remember, early days of the company, I'm sure pretty much every entrepreneur can relate to this. you have this grand vision of like, oh, I'm going to have an insurance policy that, responds like within the hour, and we can, it can be hyper flexible. Well, look, the reality is that's not how regulations are structured today. We still have to, we operate with reinsurers. At the end of the day, our customers are required to get coverage by their counterparties, their customers, their investors, et cetera. And they specify the need for a specific kind of insurance that is well known within the market today. So you got to start with, how do we improve upon the things that are required for our customers today? And we do that by making it incredibly simple for them to come in and make changes. So first and foremost is, when a customer knows that they need to make a change to their insurance, you make it so that they can come in and do that within 24 hours, that they don't have to pay for a COI or endorsement, that they can come in and make those changes very quickly, and it's active within 24 hours. So that's step one. Step two, though, is that if you think about a lot of the customers we work with, they probably don't realize that their exposures are changing or that their risk is evolving. That's actually a lot of the value we bring to the table.
Yeah.
These might be people that are building their first company for the first time. I look at my brother's a 20-year-old college dropout entrepreneur. His perspective on how to build a company is going to be very different than my co-founder, Sam, who's done it 3 times, right? So a lot of the value that we can bring to the table is monitoring, for instance, like their headcount on LinkedIn, or their funding activity on PitchBook, or some of these other things that you can say, hey, we noticed your headcount tripled in the last 6 months. Like, you might want to check this out. And sort of sending them those push notifications, not in a pushy, salesy, hey, you need some more insurance way, but hey, we're here to help you keep an eye on your risks and make sure that you're covered.
Yeah, which is crazy, right? Because they're so busy just trying to build a business that it might be something in a traditional small business that they might think about, like, oh, hey, we just bought this building. We should probably, schedule it on our insurance policy. But if you're like that busy trying to grow a company, it's where your headcount is growing at, is doubling like every 6 months or whatever, you're probably just so busy just trying to like keep the fires down that you forget, right?
Total. I mean,
Yeah.
when you've got 20 new customers sitting in your inbox, what are you going to do? You're going to reply to them, or are you going to go change your insurance?
Yeah. Oh, I would change my insurance. Yeah.
Yeah. Right.
Yeah. So like that's the tough part. And so so now that kind of gets into the other part of your business model, because you need to make trade-offs in terms of your technology, your stack, what are we going to focus on? And so you just brought up like a couple key points, like, hey, we're keeping track of your employee headcount on LinkedIn, and it's like that's not something a traditional brokerage or agency does. You sort of have to build in safeguards and other things that other agencies wouldn't have to, because your client companies are evolving so quickly and rapidly and drastically. Talk about how you think about technology. Like that's, it obviously you're an Insurtech, right? So it's like in your DNA, but there's something more, like it has to be endemic in a whole bunch of other stuff, because if that part goes away, then you become almost like traditional, right? And you sort of lose some of that value add that you were just talking about.
Yeah, well, in a lot of ways for us, it really comes down to technology is a tool to make people more effective. And our first value as a company is to put people first. Now, technology is a tool to make not only ourselves more effective, but our customers, right? That it's across both sides. And so I look at our customer experience really comprehensive of the digital onboarding experience and the customer service human element they get alongside that. So, we look at our average onboarding times and obviously the different kind of drop off we get throughout the funnel, and we want to address those. But, about half of our customers, everybody can come in and self-serve. People bought $15,000 worth of coverage in 12 minutes or less. But about half of people still want to jump on a Zoom call and have that conversation with an insurance advisor, walk them through the process, help them make those choices. And so, in a lot of ways, I look at, first and foremost, how do we minimize the amount of time, the cognitive load that a founder or a COO, CFO at a startup has to spend on insurance? So job number one is to make their job easier. Job number two, though, is also to enable our insurance advisors to not just work with, one company at a time or 10 companies at a time, but dozens or hundreds of companies at a time, because we're doing a great job of providing with them with the information, the tools that they need to
Yep.
be successful. And I will say that like the fact that we are so narrowly focused on venture-backed businesses means that they're able to go much deeper, I think, in that risk conversation, because that's all they do all day. So from a technology perspective, the challenge with that is each part of our business operates on very different time horizons. I'm responsible for go-to-market at Vouch. We operate on daily, weekly cadences. It's a very fast pace. Our technology, our EPAD was what we call engineering, product, and design, works in 2-week sprint cycles, and we try to really align upon that. And in a lot of ways, our underwriting team also works in faster turns. But to develop new insurance programs is a 6 to 18-month process.
Mm-hmm.
And so, yes, I'll give you a good example. Yes, we want to provide an amazing claims experience, and we do that through a combination of technology and great people. But one of the biggest impacts that we can make is delivering great coverage that the policy actually responds when the customer expects it to. And so you can't just make a change to your claims overnight. You have to make sure that the policy that's going to go to effect 12 months from now, is doing the right things for the customer. And so that means that you can't operate in silos. And I think one of the biggest changes for us in a business is when we first launched Vouch over the last 2 years, it was a handful of people in a room at first. And we're able to, Kelly, Roger, we're able to look at each other and make decisions really quickly, cross-functionally across technology, insurance, go-to-market. But today, now that we're about 55 people sitting across, different offices, but frankly, we have 55 different offices today. How do you make sure that those timelines align with each other and that decisions are made, and not just decisions are made, but they're also executed against in a really cohesive manner and that everyone's aligned? And so as we've grown, we've had to really reorient ourselves around our most important objectives, right? And say cross-functionally, these are the people within Vouch that are focused on growth. And these are the people within Vouch that are focused on our customer experience, et cetera. Not to say that, we've got the magic formula or anything like that, but that's just what's worked for us.
Yeah. And you also have, given the company clientele that you also have the opportunity to sort of flip the script a little bit, where you could potentially insert or integrate insurance into their workflow, like something that they can offer or provide or get into their business model. Has that happened? How do you think about that? Whether it's your clientele or outside, how do you think about getting your insurance solutions into other technology?
Yeah, it's a great question. So first and foremost, we want to meet our customers at those moments where insurance is a need, these sort of milestone moments in a business. And to date, that is largely focused on our partnership with Silicon Valley Bank, Y Combinator, that are there at those sort of the funding moment or the hiring moment, and really integrating ourselves within their workflows, whether those be their technology environment where we want to be a button, within their experience, or within their sales teams that are working with customers every day. Want to make sure that when insurance is in need, Vouch is top of mind. From a technology perspective, though, and especially when I look at the opportunities that we have to work with our clients, this is where I get really excited because we've talked about this. Insurance is one important part of the equation, but I think the rule of thumb in the industry is roughly 30% of business risk is insurable. The other 70%, I think, is incredibly important. We talked about this a few minutes ago. I use the analogy of startups are kind of like the teenage drivers of the insurance market. You've got a really wide spectrum of sophistication. Everyone's just trying to get to A to B, but they're going to do it in very different ways. And so you might have I mentioned earlier, you've got the college dropout maybe that is brilliant, has a great idea, but that's very high beta, right? It's either going to work out really well or it's not. Meanwhile, you've got maybe the experienced operator that's been around the block a couple times, that knows how important it is to invest in things like HR, legal, et cetera, out of the gate. And so we look at the world as, okay, well, first, we want, from a risk perspective, we obviously want to ensure the more sophisticated founders that are doing things the right way. And there's a bunch of, I think, really interesting research out there around this topic. And how do we provide the tools so that that first-time founder can do things the right way, and that we can take them up the learning curve from a teenage driver to a more experienced driver as quickly as possible. And I'll use the analogy of Root Insurance, who I was really fortunate to work with that team back in the early days. where they use the mobile phone as sensors on your driving ability. Well, we want to use the tools that founders use every day to build their business as sensors on the business to help coach them on risk and making the foundational investments to help them scale successfully. And so the first, SVB customers can integrate Vouch with their bank account so that we can help advise them on risk as they scale. But I think the one, to get to your point around our clients and the startups we work with, partnership we recently announced that I'm really excited about is with a company called Athena that does anti-harassment training in Slack in a really modern way. It's not like the 90s style video, that you're forced to watch. It's a really modern solution. And we're making that free for Vouch customers that have less than 15 employees, and it's 20% off as you scale. Now, the question I get from insurance folks all the time is, oh, so that's for your EPLI policy, right? I go, no, actually, that's true whether you have general liability with Vouch, D&O, EPLI, because investing in your people is a super predictor for risk management being pervasive across the company. And if there's one ingredient that matters more than anything at a startup, it's your people. And so we want that. We want to really encourage our companies to invest in that.
Yeah. Aside from Silicon Valley Bank and Y Combinator, do you have any access to other accelerators or incubators or other places where startups, specifically venture-backed ones, are hitting those milestones?
Yeah, so we're really fortunate to have over 200 referral partners across the country that we work really close with. So whether that be 500 startups, here in the Bay Area, or Capital Factory down in Texas, the way we show up is, sure, we have a perk for their portfolio companies. Our entry level coverage starts at $200 a year versus the $350 that's the cheapest we've seen in the market. But I think what's way more interesting is all the content, events, and tools that we provide for those communities. So a lot of these, whether it's myself or one of my colleagues, we're part of their Slack group, so that when founders have a question about what tool to use or about insurance, we're there talking to them in Slack about it in real time in the communities that we're all a part of. We work with venture firms like, I haven't asked him for approval to mention his name, so I'll hold off. But we work with a lot of venture firms around, making sure that the D&O they require within their portfolio is successfully implemented. So they include us sort of at that term sheet phase. So I think embedding ourselves within the tools communities, it's a huge part of what we do.
So is it more likely than not that for a lot of your client companies that you are on their Slack channel?
I don't know. If I were to maybe add up all the different Slack communities we're a part of, there's probably a decent chance that you could ping one of us.
Yeah, that's phenomenal. They're probably working in Slack on day to day, all the time, and so for someone to just be able to notify someone at Vouch and say, hey, I have an insurance question, I've never heard of that before. Usually you got to go to the portal or pick up a phone or something like that. And that's meeting them where they are.
It's really interesting. So you can Zoom, chat, however you want to engage with us. We do have a phone line. Although I'll be honest, I think we get more calls on the phone line of people pitching us services than from our customers. But
yeah, of course. How do you approach B2B marketing? And for other startups in the area, any tips that you have or you've learned?
Yeah, well, I would say first and foremost, I'm really fortunate to have an awesome partner in marketing, Kai Hansen. He came from more of a consumer fintech background, and so brought a really, I think, interesting perspective to the table. And frankly, we spent a long time looking for Kai, and so
specifically him.
Well, looking for the right person to lead marketing. And so for a long time, I was kind of doing it off the side of my desk, and there were some really embarrassing assets we produced as a result that we do a Hall of Shame someday.
Yeah,
I think
Photoshop's not your primary piece of software.
Not. We did this direct mail experiment in Utah one day. So if any Utah founders have a direct mail piece from us, I'd love to see it. So anyways, long story short, our marketing strategy, it's twofold. I think there's the awareness component, and then obviously there's the sort of direct acquisition component. And for us, word of mouth, that awareness component is absolutely critical. And that's where one of the biggest things that we found is that once we reach a tipping point in a given market, and that can be defined by geography, or that can be defined by a startup vertical like enterprise software or fintech. Once we reach sort of 5% plus market share, the word of mouth starts taking care of itself. And so on, the how did you hear about us section in our application, more and more we're seeing another founder. Or my favorite one was, I'm a startup in Utah. I just need to use Vouch, which was really cool. Now, there's obviously a lot of work that goes behind that. Yeah, you have to deliver an amazing experience. You have to show up in, I think, the venues, the forums where these conversations are happening. So being a part of, whether it be sponsoring different events, or what we really like to do is host things to really give people an opportunity to come together. So I host a monthly FinTech founder roundtable. We're going to do more and more things like that for founder communities. We're hosting a risk webinar series with our friends at SVB. So there's a lot of different things that we can do like that, really at the top of the funnel. But the other thing is, I think we really like to two things I'll hit on. From a sort of direct acquisition perspective, it's most important that we're finding people when that moment of that insurance is in need. And that might be 5% of companies at any given point in time, maybe. And so, understanding what tools, who are they talking to around that fundraising moment, and really focusing our acquisition efforts there, super important for us. And I think that lesson has got to be pretty broadly applicable for anybody in B2B marketing. You want to find them in that moment of need. The second thing is we have a relatively small market. There's like 30,000 companies in the US that make up our market. And so we're able to get pretty granular around account-based marketing and identifying in advance, who are the companies in a given space that we really need to prioritize, and what commonalities do they have, and how do we get in front of them?
Must be amazing to see your research CRM, because it's 30,000, but it's rolling, right?
Yeah.
Like new companies are starting all the time, so you have to constantly have your finger on the pulse we need to add this to our database, and who are they and what are they doing?
Yeah, it's ongoing. Well, and a lot of it is we can't predict the future. Like if we were, we'd be, I don't know if this is the business we'd be in necessarily, but like a lot of the best founders come, relatively consistently from a lot of the same places. And so there's two components to this. One, yes, partnering with the Y Combinators of the world gives us, amazing exposure to the next generation of companies. At the same time, I also think it's very important to look beyond where the industry has traditionally played, particularly in a moment like this where, we've seen emerging markets. I'm biased towards Columbus, Ohio, given I grew up there, but you've also got places like Utah, our first launch market. Austin, Texas obviously comes up quite a bit. There are markets across the country that have been building amazing technology communities over the last 10, 20 years. This moment in time has only accelerated that. And I think the opportunities for underrepresented founders to build companies and overcome those barriers to entry is really powerful. And so that's why we partnered with Transparent Collective to help facilitate the pathways to building startups for underserved communities. And so suffice to say, focus matters, and taking a very data-driven approach to where to find the best company matters. And I think just philosophically, we're really passionate about lowering the barrier to entry for entrepreneurship to everybody.
Yeah. So, which is interesting, because I think that's a good segue to my next question, because it's probably been over a year since we talked. And I remember asking you, like, hey, you're dealing with a clientele that's very volatile, meaning that purposely you have companies that are going for moonshots. So they're dealing in generally taking high risk bets to try to get significant market share and all of that, and encouraged to do that by the VC community. Like, they don't want 10% return. They need 1,000% return. They need a few of those to kind of hit, because they're expecting the others to kind of fail on that. So we talked about that. And I remember at the time you said, well, it's still early days, and so we haven't had to worry about that. And a lot of your portfolio has stuck around with you for time, which means that you must be thinking about the future, right? And so, these companies are going to grow and sort of mature with you. And I think we also had that conversation too. Like, what if they mature and they feel like, oh, we need to be with one of the big brokers because that's what big companies do. And, we probably still haven't hit that time moment, but I'm wondering, you're in a unique opportunity. Like you're positioning yourself as a trusted advisor using technology and providing a unique and distinctive set of advice for their niche, hitting them at that moment, but knowing, hey, you're VC backed and you're going through this progression, you're going to need this and you're going to need this, and what about this? And we'll be here for you as you pivot and do this all this other stuff. So as you mature, as you grow with these companies, how do you see Vouch? Do you see Vouch as continuing to be the trusted advisor and sort of bringing in other solution sets, which you almost hinted on as, hey, we scan the marketplace. We've seen a lot of startups, this work, a lot of successful ones do this, and a lot of the unsuccessful ones do this other stuff. Or do you see yourself laser beaming in and saying, no, it's going to be like insurance risk management type of thing, because that's not going to go away. The risk is always going to be there, this external uncertainty. If you have a crystal ball, let's pretend like you can predict the future. How do you see Vouch kind of navigating those two elements of adding more in to provide more services, or laser beaming in more?
I think the reality is it has to be a little bit of both. So to your point, I think it's kind of funny. Like you when we were designing a lot of the user journey stuff, it's like, oh, Series A, Series B, there's this kind of trajectory. Mm-hmm. No one follows the same linear path. Like, it's all over the place. And so some of the, I think, signals that really matter, and in terms of really the signals that a company is kind of shifting gears into that next phase of their business, is going to be when they hire for certain roles. So that's their CFO, a GC, a COO, and that's typically when the insurance buyer changes from being the founder to someone
mm-hmm.
that they've empowered with that decision. And so what matters to that individual is very different than what mattered to the founder, right? To the founder, it was, okay, I'm really busy. Well, but founders are different, right? I don't want to stereotype everybody falling in the one bucket.
No, but that makes sense. Yeah, they're juggling a lot. Headcount is doubling every 6 months, and COVID, and they got to survive. They got to keep it in survival mode. Whereas making that a position, that person is fully responsible for insurance and will get fired if they make bad insurance decisions.
Yeah, and let's be like, the reality is that person, wants to come in and prove their value to the company.
Sure.
And so they're going to revisit things like insurance and bookkeep. That's going to happen. It's important that we know when those people join the company. We've had, some of our fastest growing clients have added like 2 layers to the organization in the 9 months since they bought the policy, right? So that's one of those things that's just important for us to stay in touch with our customers around. And I think really focus on, how do you help that new person be successful in their role? And, part of that is the sort of educational value that we can provide around insurance. A part of that is being a true risk management partner with tools like Athena and some of the other things that we'll be announcing over the next few months to both, I think, broaden our reach in terms of impact across the organization, and just obviously provide more value. And then, I think the at the end of the day, price and quality of coverage is going to drive a lot of the decision. Yes, the ease of experience really matters. We found that CFOs that have been a part of a startup before and gone through the insurance process really don't like the renewal experience and filling out PDFs again. And so, being able to point to the simplicity is helpful. But ultimately, to our conversation a couple minutes ago, like, they need to show value, and oftentimes that takes the form of price savings or a better solution. And so it's not enough for us to just have like a really nice digital experience and some of these cool tools and partnerships. We've got to have the best coverage in the market too. And that's where, our ability to, one, really narrowly focus on this market and craft, I think, really unique coverage solutions, and 2, learn really quickly and, follow that with refiles and new products and the policies that these companies are going to need as they scale, really, really important to our long-term success.
Yeah. You brought up Root. Alex Tim is an advisor to Vouch, and so Root's been incredibly successful. right? And what they've done in the personal line space, starting with auto, telematics, going to homeowners. So I'm wondering, like, what that advisorship, how that may have influenced Vouch and what they've gone through, how they've done things, and how that's kind of filtered down to you in terms of decisions that you've had to make.
Yeah. So, I mean, first of all, Alex is a good friend, and I've been really fortunate to know him back, since we worked at Nationwide together. And I was really fortunate to be a part of kind of, investing in and helping root in the early days. But what I'd say in terms of the impact that's had on us is, we try to catch up at least once a quarter and kind of get his input on different things that we're doing. And, our businesses have a lot of differences, but there are also, some parallels. In a lot of ways, there's things that we do that rhyme with each other, if you will. And I think it's, how we think about the velocity within the organization and the rate of change being one of the most important things out there. How we think about, capital markets and hiring. I think the mix of technology talent versus insurance talent is a super important balance to get right. And I think they've done maybe a better job than anybody else at it. And so, I think getting Alex's perspective on things is always helpful in terms of challenging ourselves to think about things a little bit differently, because I think they've done an amazing job of that. But at the same time, recognizing that, like, we have fundamentally different businesses and challenges that we're solving for sometimes. So to give you an example, my experience at Root made me think, oh gosh, like, we've got to be a carrier from day one to really control the value chain, et cetera. Well, look, the reality is, like, we have 10 different lines of coverage. Our biggest states are California and New York. Like, those and we're writing high limits. And so the capital required to go do something like that, it's just a fundamentally
Enormous.
different dynamic.
Yeah.
Yeah. And so we had to, go about things in a different way and become an MGU. And, I think our partnership with both Munich Re and State National have been really successful. And, but there are parallels, and there are things that we just, fundamentally have to do differently.
Yeah. Let's talk about that. Let's finish off the technical part of the questions with that, because that's interesting. I just recently interviewed Mike Gula from Hippo. He was the first insurance professional at a tech company. We had a whole episode on what's that like, you know, and it's he went into, it's weird, he went through the traditional legacy insurance incumbents just like we did. And so here he comes in, there are these tech guys basically trying to do that disruption thing. And, in some ways he had to kind of set them straight. Like, you can't do that. That's illegal. Oh, I never thought about that. So how do you think about that? And let's kind of do it this way. As of right now, are you majority tech talent or majority insurance talent?
Ooh, I would have to think. The head count is pretty evenly split, actually, across the three functions. It's product engineering definitely has the most headcount in the company, but I would say go-to-market and insurance are pretty equal in terms of balance there. When I go back, and I think, as I mentioned earlier, like, getting that balance right is absolutely critical. And it's like, I think both the number one challenge in our business and the number one differentiator if we get it right.
Yeah.
And so, when I think about, in particular, my colleagues on our insurance team, like, they're working on projects that aren't going to hit for 6-12 months, right? A lot of the time. And so how do I make sure that they're still plugged into the momentum in the business day to day, and that we're all actually part of the same team and not defaulting into these silos? And, I think when I go back to the early days of the business, it's super, before you think about insurance versus go-to-market versus what have you, culture is like the number one thing to get right there. Mm-hmm. And if you don't have a culture where people, believe that you're showing up with your best intentions every day, that they know that you care about each other enough to directly challenge each other and really come to the right answer, and then disagree and commit on a direction. Like, those are the foundational building blocks no matter what industry you're in. Yeah. And I think it's particularly important when you have cross-functional challenges, in a regulated category like insurance or other fintech businesses.
Yeah.
When I go back to the really early days in the business, when it was a handful of us, around a whiteboard, at first I was the insurance person on the team. I think I have enough experience in insurance that I know enough to be dangerous, but not enough to actually maybe know where all the boundaries are. And so, bringing John in, who has 20 plus years of experience doing this, I was able to see, oh, that's what that's what world class actually looks like. And as we continue to grow the team, it's our jobs to challenge each other's assumptions and push each other to think differently. It's John's job to challenge me to think differently about certain things with our customer relationships and vice versa, and really the entire team. And so I think to do that successfully, it comes back to the cultural elements and getting that right first.
Yeah, and I think that might be one of the biggest advantages of an Insurtech, meaning a company that has sort of tech as in its DNA versus an incumbent, because I think what you just said, I think, translates to the economics of the business, because I'm going through the same thing. So I think about this all the time, and I'm with you 100% with the culture. And I could almost see it translating from like a microeconomic sense. I see that, well, as this scales, right, as the business scales, we actually won't need, like a traditional insurer will need to sort of proportionally grow their insurance staff as the business scales, right? But in an insurtech with like yours, where let's just say it's a 50-50 split, technology is picking up a lot of the load. Like a lot of that overhead that an incumbent, let's say underwriter or actuary, has to kind of slog through is being handled by a machine. And they can do the value add stuff. And I would even flip it around and just say, because half the team is insurance, the tech also scales nicely too. So as the business grows, you don't need to bring on as much tech people, and you could sort of do more with less, so to speak. Your company is still going to grow, but you can grow the business exponentially more, whereas I think traditional insurance really suffers from that. I think traditional insurance is there. A lot of the economics sort of break down. They get the benefit of the law of large numbers to work in their favor, but the staffing suffers. So the culture goes down, and you start to get that conflict that exists between the carrier and the policyholders because they don't talk to one another. It's too, or the carrier and the broker. There are too many layers, there are too many silos, things get slowed down, there's too much friction in all of the different areas. So the broker, even a carrier broker, the broker might be waiting for something to happen, whereas an insurtech might have the advantage in that, like, your COI type thing might just be instantaneous, like just boom, 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 you got it. Have I connected the dots for you on that? Like,
absolutely,
I'm sure you've
well,
thought of that.
All the time. Well, it's in my mind, this whole thing is about asymmetric bets. Like, the company is an asymmetric bet. Like, if it works well, there's huge upside for everybody involved. And if it doesn't, the downside is understood. It's defined. Same time, that's how we got to think about people that we hire, investments that we make, whether it be in technology or other resources. I think there's this really big misconception, and learned a lot about this along the way so far, around, hey, you've got to go build the perfect mousetrap, build it and they will come. And in a lot of ways, you actually really want to solve your problems with people first, and you kind of need to overinvest in doing the things that don't scale. It's kind of a startup trope, but I found it to be very true. In a lot of ways, our technology experience and our people providing amazing service has been the number one thing we see in user feedback constantly. I think our NPS is like an 86 last time I looked, and it's, wow, an amazing experience, and wow, Miles, Debbie, David were amazing and helped me through this process. And by doing that and having, I think, really creative people that are bought into the mission and care about getting it right, that are grabbing that feedback on the front lines and feeding it back to the product team and working together to automate all the things that we're doing, this sort of human in the loop process to building new solutions, enables you to move a lot more quickly and do a lot more by solving those, doing the things that don't scale first, and then using technology to scale it. I think is super important.
Yeah, you just reminded me of something, because you brought up scale. So I'm trying. Michael Seibel from YC was on Invest Like the Best, and which was a phenomenal podcast. Like, he really got into the YC thing, and he talked about that. He talked about that specifically, and he said companies are just, startups are just too quick to scale. It's like you should just assume you don't have product market fit. And he
Mhm.
kind of talked about it from his background as a startup founder, with like Twitch or Justin TV, and talked about how he's like, this is what product market fit looks like, and he's like, everybody's looking for like this textbook definition where you're just like, aha, we got product market fit, and it's like it's really messy. Like when you're in it, you don't know you have it, and all of a sudden like the scaling piece of it becomes just absolutely critical or the company will die. And I think that's like extremely important what you just described, because I think one, companies are too quick to want to do it, but second, if even if you're going to scale, I think if you don't recognize the human piece, you specifically mentioned the insurance professionals and how, like, customer service, for instance, if you haven't nailed that down, like if you're just thinking, well, we're just going to write some code along the way and that'll just sort of take care of itself, it's like you sort of need to see it successfully done on the human element and say, okay, well, that's how it's done. Now let's figure out how to automate pieces of that, because you may not be able to automate the whole thing. And like I love what you just said, because I see the opposite. I see it's just customer service. And they think the scaling just sort of magically happens, and that's where I think a lot of things fall apart. Like the culture breaks down,
Yep.
promise that you make to your customers, to your stakeholders. All of a sudden, everything just sort of deteriorates. It's not the same. And yeah, you might be able to pump it full of steroids with financing or some other stuff, but it's not the same. And
Well,
so
to your point there, Nick, like even if you have unlimited resources, time is finite. And
it's
at the
true.
end of it, like you can only do so many things really, really well.
Yeah.
And I come back to, as we're talking there, a quote that came back to me was, AI over the years has basically been defined as whatever computers can't do yet. Like it used to be chess, right? And then it used
Yeah.
to be something, and like 10 years from now, we'll think of AI as something entirely different than what we think of it as today. But in a lot of ways, it's like you go back to the old Steve Jobs quote of like the computer is like the bicycle for the human mind. That's exactly what this is. Now
Yeah.
I think there's a really important like delineation here that people get tripped up on a lot, is that they hear, oh, do the things that don't scale, solve it with humans, and then solve it with technology. And they say, oh, well, like that seems, who's the wizard behind the curtain? Like, where do you draw the line between that and Theranos, for instance, right? And I think that's really tricky. And that a lot of founders get caught up in this
Yep.
fake it till you make it mentality. And I think the reality is like the moment that dissonance starts to disconnect, right? And you have to truly like, it's one thing to solve it through amazing people and customer service and that human element. It's another to lie to your customers about what's actually going on behind the
Yeah.
scenes.
Yeah.
And it's our job as an insurer to these companies to try to help parse those out. Who are the pretenders and who's for real? And look, that's a challenge that we're going to be focused on for, I hope, the next couple decades.
Yeah, that reality distortion field's a real thing. I see people, it's just like, that's not true. And it's like, well, and they kind of start to spin it, and it's like, it's kind of true, and it's like, oh, I don't want our customers to hear that. But anyways, real quick, since we're getting to the top of the hour, I want to start doing this again. Books, very important to me. I'm really
Yeah.
getting into it again. Anything in particular that you found to be influential, business or personal life, but of course, business, since this is a business
Yeah,
podcast.
I keep going back and forth between sci-fi and history books recently. And I find, oh, what was the book?
What history topic do you like?
Um,
Any and all, or?
significant figures and moments in history in particular. So I read a book recently called Towers of Gold,
Mm,
and it's about Eliza's, what's his last name? Anyways, he was like basically the banker that helped build California in the 1800s. His family came over from, he and the Strauss family and the Haas family all were in the same village in Germany. They came over, built LA. He ultimately started the banks that became Wells Fargo and Bank of America today. And what was really cool about that for me is to go back and see actually a lot of the parallels to today. Like, at the time, the train the locomotive had a
yeah,
major
yeah,
impact on California's economy and the opportunities that unleashed for people. And the same thing is happening with technology today. and the institutions that are created and that evolve to respond to that technology change, there's just a lot of parallels. And I don't know. I really geek out on reading stuff like that, and then I finally got around to reading the Foundation series recently from Isaac Asimov, which I don't know. I think reading sci-fi helps you think about what might be possible in the years ahead.
Yeah, imagination. Yep, I love it. Travis Hedge, awesome to talk to you. Thanks for sitting in the hot seat. Best of luck to Vouch.
Always a pleasure, Nick. Thanks for having me.
Okay. Yeah, for everyone that's listening, please hit the subscribe button. There's not enough of you hitting that button, so hit it, and Travis and I will appreciate it as usual. Thank you, Travis. Appreciate it.
Thanks.
Okay, you thought we left, but we're back. So just found out that Travis did the old faux pas. He forgot to make the big announcement that he was supposed to make.
One more thing.
One more. Yes. So Steve Jobs. Travis Hedge. What's your one more thing?
So I'm really excited to announce that Vouch Insurance is live in New York as of October 20th, and so we are proud to serve New York startups, and that puts us now in 95% of U.S. venture activity. So really excited to be in New York, and hopefully I'll see everybody there soon.
Well, New York City's supposed to be like the new center of tech startup land, so it's natural that you would go there. So if you're in New York, you're a startup in New York, look for Vouch. And so now we get to segue back out. So Travis, thanks again.
Thanks, Nick.
I have a dream that one day this nation will rise up and live out the true meaning of its creed. We hold these truths to be self-evident, that all men are created equal. I have a dream that one day on the red hills of Georgia, sons of former slaves and the sons of former slave owners will they be able to sit down together at the table of brotherhood. I have a dream. My 4 little children will one day live in a nation where they will not be judged by the color of